Are you ready?
I'm ready.
Okay. Good afternoon, everyone. Good afternoon. Welcome to the Month of Service Partnership. The Month of Service is all about giving back free information to the Houston community. We apologize for starting a little bit late, but we had some difficulties. But the Month of Service is whenever you're going through a stressor in your life, we're here to kind of give you all the information that you need, that you can go, wait a minute, okay, I need to stop and stop stressing. And I need to know step 1, 2, 3, what do I need to do? Because you know what, a lot of times different people know specific processes on how to take care of situations. And we at the Month of Service want to make sure that everyone has the same information, and that everyone, when you're ever going through a stressor, and I love how Nia says it, actually you need this information all the time, not only when you're going through a stressor. So we want to welcome you again to the Month of Service. My name is Myra Hippolyte, and I'm with the City of Houston Department of Neighborhoods under the direction of Takasha Francis. And on behalf of Mayor Sylvester Turner and Director Takasha Francis, we want to welcome you to the Month of Service. The Month of Service is a partnership between 8 different organizations. It's Neighborhood Recovery, Harris County Appraisal District, Harris County Tax Office, Houston Bar Association, Lone Star Legal Aid, Houston Volunteer Lawyers, TSU Earl Carl Institute, the City of Houston Department of Neighborhoods, and Neighborhood Recovery. Guys, it's a great collaboration, and it's all about giving back free information. Not only that, we have a great presentation for you today. Ms. Monique Cheney, I probably pronounced it wrong. It's all about educating you on how to clear your credit. This is great information. This is great when you're thinking about starting to buy your home, when you're thinking about buying a car and making any type of investments. Now, as a matter of fact, they're checking your credit report for even your insurance, home, car insurance. So this is a great process for you to learn. Thank you, Monet, and welcome. Could you introduce yourself?
Hi, my name is Monet Cheney, and I am a financial coach with an organization called Family Houston. And like Myra said, this presentation is to give you some basic understanding of how credit works and how things that you can do to either build your credit, maintain your credit history, or rebuild your credit history. If you're ready for us to get started, then I can go ahead and get into it. And then at the end of the presentation, I'm gonna talk about what financial coaching is, how we can help, and how you can sign up for a financial coach at Family Houston.
Thank you, Monet.
So just 2 learning objectives for tonight is we're going to cover understanding the basics of credit history and your credit score. And then I'll talk about some best practices to help build your score. And at any time during the presentation, if anyone have any questions, if you have anything that you have done in the past to work on your credit, then feel free to let us know. You can either drop your questions or any information that you have into the chat box, or you can raise your hand or stop me at any time to ask questions. We do like for our presentations to be a little bit interactive, and we love to hear from all the attendees anything you would like to share. Also, be mindful of the information and questions that you're asking, because we are recording this, so other people in the community will be seeing this presentation. So try to avoid any information about yourself or personal life that you wish not to be recorded today. So we can keep the questions a little generic. If you have any specific questions about a particular situation that you have going on, my contact information will be at the end of the presentation, and you can reach out to me to either schedule a coaching appointment or to ask any specific personal questions that you have. So to get started, I do want to talk about why credit is important, because sometimes I hear people say they want to be debt-free and have no credit at all, or they don't see how having good credit or having a credit history is a benefit to them. So some of the benefits of having a good credit history is, of course, better interest rates. So the higher your credit score is, the more likely you are to get low interest rates, which will save you money over time on different loan products that you're applying to. As well as having a good payment history. What I've learned recently when I purchased a car, that having good payment history can help your interest rates as well. So having a good payment history as well as having a high credit score will help you get lower interest rates on different loan products. Some people are not aware of this, but there are some employers who do look at your credit history to determine your eligibility for job positions. In my past role as a career coach, I actually had a client who was told that she had to work on items on her credit report as a condition for her to get hired. So it is very important to consider your credit history when applying for certain jobs, and whether or not that can affect you getting that dream job that you're seeking. Next is your insurance premiums. Your insurance premiums are based somewhat on what your credit history looks like. So of course, the better your credit history is, the lower your insurance premiums will be. And then sometimes your utilities can be based on your credit history as well. So that can affect like what your utility rates are and whether or not there's any upfront costs that you have to pay to sign up for certain utility companies. And then lastly, housing. So when it comes to renting a house or renting an apartment, they always pull your credit history. And your credit score and the content of your credit history can affect whether or not you are eligible for certain properties, as well as it can determine how much you're paying up front. I've seen where individuals were told that they had to pay an additional deposit because they didn't have a good credit history, or they didn't have enough credit history when they were applying for an apartment complex. And again, sometimes you can be denied at a complex that you're seeking to rent if you don't have a good credit history, or you have, or you show that you owe apartment complexes on your credit history. So one thing that I do like to say is good credit is always going to save you money over time, and bad credit is going to cost you more money over time. So what is a credit report? So your credit report is the history of your interactions with creditors over the last 7 to 10 years. And so what it shows is your payment history with these creditors. It shows your starting balance and then how much you currently owe. It shows like with certain loans, you'll see what your loan terms are, what your monthly payments are. With credit cards, you of course will see your minimal payments and your current balance and limits. So there's so any information that pertains to a creditor that you have interactions with or activity with over the last 7 to 10 years is going to all be on your credit history. There are some information that's not on your credit history, such as banking information. So that information tends to fall on a different report. So just keep in mind that when you are reviewing your credit history, that the information on there is for the last 7 to 10 years. If you do see information that's older than the 7 years, then that's where you can reach out to either that creditor to have it removed or reach out to the credit bureaus. There are 3 credit reporting agencies, TransUnion, Equifax, and Experian. And then your credit score is based on, is a number based on the information that's in your report. And this is the likelihood of you paying back a lender. So next is, how long does debts affect your credit history? So the rules for reporting debts can be found in the Fair Credit Reporting Act. This act states that most negative items must be removed from your credit report 7 years from the first date of delinquency. So when you are reviewing your credit history, and if there is any information, and this could be items that are paid off, it could be negative payments, so late payments, or it can be charge-off items or any type of delinquency items. Whenever those items hit 7 years from that first date of delinquency, then that information should automatically be removed from your credit report. Again, if this information is not being removed from your credit report, then that means that you can contact the credit bureau and file a dispute showing proof that that information has reached the 7 years. An easy way to know what this date is that when you are reviewing your credit history, some credit bureaus, they do tell you the date that certain items will expire from your credit report. Next, Chapter 7 bankruptcy filings show as a public record for 10 years on your credit report. Judgments, so anytime someone files a suit against you, those judgments last on your credit report for 7 years or until the state statute of limitation expires, whichever one is longer. Anytime there's money owed to or guaranteed by the government, so unpaid taxes or student loans, those stay on your credit report indefinitely or until 7 years from the date paid. And then lastly, your inquiries. So anytime you apply for credit and there is a hard pull of your credit report, those inquiries remain on your credit report for 2 years. So when you are looking to repair your credit and there's certain information that you're wanting to see when that information is going to expire from your credit report or no longer be affecting your credit score, then it's good to understand like when those things are going to fall off. Is there any questions about anything that we've gone over so far?
If Monet, if they have questions, they can also document them, put them on chat, as well as let's just wait for the end of the presentation to ask the questions.
Okay,
thank you.
So so now I'm going to talk about your credit score because the credit score, again, it does play a big role in determining what type of borrower you are. And it also helps determine what your interest rates are, as well as if you qualify for certain loan products. The FICO score is the actual score that you should be paying attention to. The FICO score is the credit score that most lenders are going to pull when they're trying to determine if you're eligible for a particular loan product, as well as when you go apply for apartments too, they do pull your FICO score as well. There are 3 FICO scores, one for each credit reporting bureau. So it is a good idea that when you are applying for a particular loan products, as well as when you're applying for, I've seen this with apartments too, when you are applying for apartments as well, ask them which credit report they will review so you can have an idea of which credit score that they will be looking at to make sure that your credit score meets whatever eligibility they have to get that loan product. Your credit scores, they range from 300 to 850. 640 is usually like the magic number to qualify for most lenders and creditors. There are some lenders out there that might accept the 620 and higher. Again, when you are applying for different loan products, and different credit type products, just double check with that creditor to see what their minimum credit score is to qualify. So these are the 5 things that go into calculating your credit score. First, there's payment history, which is the biggest portion of your credit score, and it takes up 35% of your credit score. Payment history is going to include on-time payments, late payments, and collection items on your credit report. So just making sure that you maintain on-time payment is going to ensure that your credit score is going to continue to go up based on your payment history versus going down. And then, of course, anytime collection items are added to your credit report, that does affect your payment history as well. The next biggest part of your credit score is your credit utilization. And so this is how much of your revolving debt that you're using. So if you have lines of credit or credit cards on your credit history, the key number is to stay under 30% of your total limit. And making sure that you're keeping your balances low so your credit utilization doesn't cause your score to go down, because it does make up 30% of the credit score. So usually when I'm working with clients on building their credit score or rebuilding their credit score, the 2 main things I really tell them to focus on is their payment history and credit utilization, because it does take up 65% of your credit score. And those are things that actually change or affect your credit score on a monthly basis. So just making sure that you are paying on time, making sure that you're keeping revolving debt balances to a minimum is gonna be the key items to helping your score go up. The other 3 factors that affect your credit score, of course, is average age of accounts, which is 15%. The average age of account is the length of credit history that you have. So the longer an account has been open and on your credit history, the better your score looks. So anytime you open a credit card, it's good to never close that credit card, even if you pay it off. Because if you do contact the credit card company and you say, hey, Capital One, I'm no longer using this card, it's paid off, I want to close this card. What's going to happen when they close that card? And say, for instance, you have that card open for 10 years. So when they close that card, then you lose 10 years of credit history. Now, if you decide that you no longer want to use that card anymore, then it's more important to leave that card open and cut it up, take away your ability to use it if you wish to no longer use that card. And then eventually that credit card company is going to say, hey, this person is no longer using this card, so we're going to close it due to inactivity. So when that happens, that 10 years of credit history that you have on that credit card stays on your credit history, and you maintain that history. So it's very important that when you have any type of revolving debt, to never contact the credit card company to close the cards, unless you're in the position to where you're doing a debt payoff plan, and the only way to pay that card off is to negotiate a lower interest rate and a lower monthly payment by closing the card. So it should be a last resort. So if you have credit cards and you just paying them off and you're no longer using them anymore, make sure you leave those cards open so you don't lose that credit history. Next is the credit mix, which is 10% of your credit history. A credit mix is just basically showing creditors that you have multiple types of credit. So you have installment loans as well as revolving debt. Having a good mix of credit shows creditors how you interact with different types of creditors. So it's always good to have at least one installment type loan or creditor, as well as one revolving type of debt. And then lastly is your inquiries, which is 10% of your credit history. Inquiries is anytime a creditor does a hard pull of your credit history. And it's good to keep those to a minimum. Usually once you go over 3 to 4 inquiries, then your credit score can drop a little bit. If you are in the process of shopping around for a loan product, such as purchasing a car or purchasing a house, then it's okay to have a few inquiries on your credit report, because you are currently shopping around for the best rate or the best deal with lenders. But it's important that if you are shopping around for an auto loan, or you're shopping around for a mortgage loan, is to make sure that you are eligible or prepared to close on a loan within 30 days. Because what happens is, if you don't close on a loan within a 30-day time frame, then every single inquiry is going to be on your credit report, and every single inquiry is going to affect your score. But if you do close on a loan within 30 days of shopping multiple lenders, then all of those inquiries are not going to hurt you, just a few of them will.
Monique, before you get too far, can you give examples or touch on the difference between installment loans versus installment debt versus revolving debt?
Yes, I think I have a slide that covers unsecured and secured debt. So I can touch on it when I get to that slide.
Okay.
So like I said before, credit utilization, it makes up 30% of your credit score. And so if you do have revolving debts on your credit history, it's good to understand how to calculate your credit utilization. And it's a pretty simple formula. So basically what you'll do is add up all the balances that you have on credit cards or lines of credit, and then divide it by a total amount of all your limits. And then that number you get is your utilization percentage. So in the first example is for someone, if you have one revolving type of debt. So this person has a $600 balance and they divided it by their limit, which is $1,000. And that equals a 60% utilization. So on this person credit report, that 60% utilization would actually be bringing their score down. So what they would need to do is calculate what is 30% of $1,000, and then they need to reduce their balance to under that dollar amount in order for their utilization to no longer bring their score down. If you have multiple revolving debts, then again, you're going to add up the total balance of all of your credit cards. So in this example, there's 3 credit cards. And then you're going to total up the all of the limits of all 3 cards. And then you'll divide your balance by the total limit. And then that would give you your utilization for all of your revolving debt. And again, your utilization must stay under 30% of your total limit in order for your credit score to not start to drop. So anytime there is an issue with utilization, the best thing to do either to start paying down your balance, which is the best option, because again, you're going to be saving over interest over time, or in some cases, you can increase your limit to help your utilization go down. But usually the best option is paying your balance down and getting those cards paid off one by one in order to make sure that your utilization isn't affecting your credit score. So these are, again, I'm just going over things that affect your credit score. So when you are in the process of either building your score or rebuilding your credit score, things that's going to help increase your score is going to be on-time payments on open accounts that you have on your credit report, keeping your credit card balances under 30% of your credit limit. And I did forget to add that whenever you look up your credit report and you're monitoring your credit report, they actually calculate the utilization for you, and they will let you know if your utilization is too high for your total limit. So that's how you'll know whether or not you need to start working on that factor on your credit history. So you don't really have to do the calculations yourself. The credit, when you pull your credit history or monitor your credit history, they actually let you know what your utilization percentage is. Again, keep inquiries to a minimum. So only apply for credit when needed. And make sure that when you are applying for credit, that you already have an idea that you're going to get approved, because you don't want a lot of inquiries on your credit report, and then there's no open accounts to come with that inquiry. Have a good mix of credit, and then having years of positive credit history is going to keep your score going up and maintain your credit score. The things that are going to decrease your credit score is late or missed payments. Anytime your payment is over 30 days late, then it's going to start to drop your credit score. If you do miss a payment and it's been like a day or so, sometimes you can make that payment and it doesn't show on your credit report. But if you are paying 30 days or more late, then you're going to see that late payment reported on your credit history. Next, high credit card balances. So anytime that you're maxing out credit cards, or you have credit card balances that are over 30% of your total limit, that's going to start bringing your score down. Having a high number of inquiries and these hard pulls haven't resulted in an open account. That would bring your score down. Anytime a collection item hits your credit report, that affects your payment history. And then too short credit history or no credit history does bring down your credit score a little bit, but eventually over time, that will start going up. So I'm going to talk about secure credit versus unsecured credit. So secure credit is basically a secured line of credit and is guaranteed by an asset such as a home or a car. And this can be an installment, and this is an installment type of credit. So an installment loan type of credit means that you borrow a set dollar amount. So it can be, I'll say $10,000 for auto loan. And with that installment payment, you have a certain number of years or a certain number of months to pay that $10,000 back. And then you have, and then they'll give you an interest rate. And so basically with an installment loan, you're gonna pay. And then once you reach that, reach the number of months that you have set on that installment payment, then you'll be completely paid off. With revolving debt, so like a secured credit card, that's guaranteed by a deposit made by the card holder. So with the secured credit cards and unsecured credit card, you don't have a certain number of months or years to pay it off, and then that credit limit will go away. Your credit line is constantly revolving until either you close the card or the creditor closes the card. So usually what happens with revolving debt, you borrow money from that credit limit, and then when you pay it back, the amount that you pay back goes back and replenishes the credit limit. So you're constantly borrowing and paying back, and that credit limit is being replenished. So that's the difference between installment loans and revolving debts. And so when it comes to secured credit, if you need to build your credit history, secured credit cards are a good option for those who are looking to build their credit score up, because you do give a deposit, and your deposit is what determines your revolving credit limit. So then in the case that you're unable to pay that credit card back, then that deposit is used to cover what you owe on your balance. And then when it comes to installment or installment loans that are secured by a home or car or some type of asset, those lenders, they put liens on that asset until the loan is completely paid off. Once that loan is paid off, then you can request that the lien be released, and then you'll be the full owner of that home or car or property that you had the loan on. And then lastly, assets that are secured by a line of credit is seized to cover debt if the borrower defaults on a loan. So anytime you have a line of credit that is guaranteed by asset, if you default on that loan, or again, if you have a secured credit card and you're unable to pay the balance off, then the asset that is used, that is guaranteed, is then seized to cover what you owe on that debt. And one thing to keep in mind, that when you do have a mortgage loan or a car loan, keep in mind like the value of that asset, because if you are wanting to sell that asset and pay that loan off, it's good to have a higher value than what you owe. So then that's money that you get to keep, and then that loan could be completely paid off. Usually if the asset value is less than how much you owe, then you're in a situation where you're upside down. And so then if that asset is seized and sold to pay that loan off, whatever is remaining is going to remain on your credit report as a balance that you have to pay back. So just keep in mind whenever you're purchasing a home or car, and especially a car, it's mainly a big deal with the car. So anytime you're purchasing a car, just making sure that you're able to get a good interest rate, and also making sure that that vehicle loan isn't too much above what that vehicle is worth. So you're not upside down in the case that the vehicle is repossessed, or you decide that you want to sell the vehicle in the future. Next is the unsecured credit. So unsecured line of credit is not guaranteed by an asset, such as a credit card or a line of credit. Unsecured credit tend to have higher interest rates, and a lender cannot seize property if a borrower defaults on an unsecured debt. So when you're using an unsecured line of credit, or you're using a credit card, anything that you purchase with that line of credit or credit card, they cannot come and take those items back to cover what you owe on that credit card or line of credit. So usually what happens is if you default on a credit card or a line of credit, it just causes your payment history to be affected, and your credit score will go down. So here are just a few tips on maintaining a good credit history. First off, develop a budget and stick to it, because getting new credit does not mean you have more income to spend. Credit is actually an extra expense in your budget. So just making sure that whenever you are using credit cards, as well as you're getting new credit products, that these payments actually fit in your monthly budget, because you don't want to have late payments on your credit report, as well as you want to make sure that you're maintaining low balances on your credit card. So it's a key thing to understand that anytime you get credit cards, that this does not mean you have extra income to spend within your budget. Save money so you are prepared for a rainy day or big purchases. So just making sure that you have an emergency fund set aside, or if you're planning on making a big purchase, saving a little bit of money to put down as a down payment would actually help limit the amount of credit that you will have to borrow, which does help you save money over time on interest. Next, always pay your bills on time, regardless if they report to your credit report, because bills like utilities, if you get behind on your utility bill, and just say, for instance, you can no longer pay that utility bill and you decide to switch companies, anytime you owe a utility company a balance, then they can place that balance on your credit report as a collection item. So it's good to keep in mind that to pay all your bills on time, not just the bills that are currently reporting to your credit history. The same thing with rent. If you get behind on your rent and you get evicted, then that information will go on your credit report as a collection item. So just keep in mind that all bills that you have, anytime you enter a contract with a company stating that you will pay a certain amount per month, that you are able to make those payments, because Again, certain companies, if you owe them money, even though they don't report monthly, once that account is closed and you still owe them money, they can place it on your credit report as a collection item. Then that's going to drop your credit score down quite a few points. Next, keep your credit card balances low and or try to aim to pay off monthly. You know, the lower your credit card balances is, the easiest it is to keep it under that 30% utilization. Of course, if you're paying it off monthly, then that can help you save on some interest on your card. Next, always monitor your credit history. At this point, there's multiple ways to review your credit history and monitor your credit history for free. Set up accounts like Experian. You can set up an account for free with Experian, so you can monitor and get alerts about your Experian credit history. Credit Karma is a free site to monitor TransUnion and Equifax credit reports. Set up those accounts so you can monitor your credit history on a regular basis, because anytime information is added or anytime there's any information that's changed or updated, then you'll know right away what's happening with your credit history. So in case there's some information that goes on your credit history and is incorrect, then you can dispute that information right away. Or if there's a case where somebody steals your identity and open an account on your credit, then you'll see that information right away. So just make sure that you have something set up to where you can monitor your credit history on a regular basis. And then next, only borrow what you can afford to pay back within 30 days. So anytime you're looking to open a new loan product, or again, if you're using a credit card, just make sure that any monthly bills that you add to your budget, that you can afford to make that payment within 30 days. Because again, anytime a payment is late past 30 days, then that's going to cause your credit score to go down. And then lastly, always protect your identity. So just make sure you're being mindful who you give your information to, your Social Security, who you give your bank account information to, who you're giving credit card information to. Just any identifying information that can be used to open credit or can be used to steal your identity. Just make sure that you're protecting that information at all costs, and you're being very mindful who you're giving that information out to, as well as pay attention to people contacting you on social media. Just recently, I had a friend, his Instagram got hacked. And so whoever hacked into the Instagram was contacting people on his friends list and asking for their phone numbers. So me being a financial coach and being aware of this type of scam, then I knew not to answer back. But what happens is people will hack into your friends and family Instagram and Facebook accounts, and then they'll start contacting their family members pretending to be that person. And they might send you phishing information. So they might send you links that when you click on that link, it can hack into your accounts and steal your information. They might ask you for money. So just be careful when people are reaching out to you. And if it doesn't sound like something your family member or friends would say, just reach out to them just to make sure that they haven't been hacked. Also be careful, strange text messages you might receive, and being careful with clicking on links through text messages or providing identifying information through text messages, as well as being careful with emails you might receive, because sometimes scammers, they send emails to fish for your information, and it might look like a legitimate company that you've been using, but is actually a phishing type email. And now tax season is almost over. So when you are having someone prepare your taxes for you, just be mindful who you pick to prepare your information, because that person has all of your information, as well as if you have children, they have your children information as well too. So they have all the information needed to steal your identity. So just be careful, again, who you give your information to and where you're putting your information online. Myra, do you think it's, Myra and Nia, do you think it's a good time to answer any questions about what we covered today?
Yes, and
Okay.
there's 2 questions in the chat. Well, actually a couple of them. First, can you speak more on the 2-year report?
Can Cassandra elaborate more as to what the 2-year report is?
Cassandra, could you unmute yourself and ask the question yourself?
Hello, yes, actually, she can just repeat what she said about the 2-year report.
I wanted you to repeat it.
Is it about the inquiries that's on your report for 2 years?
No, I think it was further up when you first started.
She just wanted you to repeat it.
Was it this information? Like
Yes.
what's on your credit report?
Yes.
Oh, okay, yeah, so the credit report, it actually lasts 7 to 10 years. So that information is on your credit report for 7 to 10 years. If you're asking a question about, there's other reporting entities, like just say for instance, if it's like a bank, like something bank, like just say for instance you owe a bank, then they have another reporting system that lets you know if you owe, that let other people know if you owe money to an actual bank. That's a separate credit report. There isn't a 2-year report. When it comes to 2 years, it's just the inquiries stay on your credit report for 2 years.
Okay, thank you.
You're welcome.
Let me see the next question.
I think we talked about what's the example of installment credit.
One person asked, so even if I pay all my cards on time, no late fees, I can still have a decreased score if the utilization amount is above 30%?
Yes, you can.
Wow.
So it is possible that if you are paying on time and your balances are above that 30%, you can see your credit score drop a little bit. Sometimes it might plateau where it's not moving much, or it might increase very, very slowly. So it's good to just try to get that utilization down as soon as possible. I know in some cases that it might take some time to get your utilization down, just depending on your budget. So that is one thing that that we do at Financial Coaches. We can help you, and I believe we have a debt management presentation 1 month in this series that where I'll go into some more details about debt management and how to pay off debt. But yes, if your utilization is above 30%, I would definitely recommend looking at your budget, seeing how much extra income you have available, and start working on a debt payoff plan to get your balances under that 30%, so it doesn't affect your score as much. And then you can start seeing that score go up a lot faster. And I also do recommend that if you are trying to pay your balance off a lot quicker, again, if your utilization is too high, is to look at paying your minimum plus whatever interest was added, or paying paying above your minimum to help get that balance lower and eventually get it below that 30% utilization.
Let me ask a question.
No,
Did I misunderstand you? Let's say if somebody used your credit fraudulently and you got a new credit card, did you say not to close the old credit card because you would lose 10 years of your credit reporting if you got a brand new credit card?
Yeah, so if you have a credit card that you've had open for 10 years, and you decide that, hey, I paid off this credit card, I don't want to use this credit card anymore, I prefer to use, so just say for instance, a Capital One card, and maybe you decide to open a card that offers cash back. And you say, okay, I'm going to pay off Capital One, and I'm going to use this Discover cashback card instead. So because you have 10 years of credit history with that Capital One card, because you're not using it anymore, doesn't mean that you have to call that credit company and close it. Because if you do contact them and ask them to close the card, then you're going to lose that 10 years of credit history. So it's good to just leave the card open, and eventually at some point in time, Capital One would see that you're not using the card, and then they would just close it themselves, but you'll still maintain whatever credit history you have on that card.
But that's not if it was fraud, right? If it was closed because fraud and you got a new card, you would still get that credit, right?
correct.
Okay.
She meant like if somebody hacked the card or used it against your permission or whatever, the credit card company will just send you another card. They won't close that account. You don't lose that account.
Okay.
Yeah.
Okay.
Yeah, that's what she's talking about.
Okay. I'm sorry. I didn't understand the question. I thought it was meaning if you open a brand new card. But yes, no, you still gonna have that same credit history, because your credit card number is not on your credit report. So it's just gonna be the same account information on your credit report. The credit card company is just gonna send you a brand new credit card number. But it's not gonna change the history with that card on your credit report.
Okay.
Can I go back to the point about the credit utilization? We know that a lot of people will open up a credit card to help them with establishing credit. But the trouble with that is we get some people that will say, hey, I got this credit card, and we'll use that credit card to pay all their bills for the month. There's nothing wrong with that. However, if you use that credit card to max out every month to pay everything off or to pay other bills or things like that, and you're paying it on time, regardless if you're paying it on time, because the card is maxed out, to the creditors, that look as though you're not quite responsible with the credit that they're actually giving you. So you could spend up all you want and then wait till that statement comes out and then make that payment. Because you're making it on time, you're thinking that you're establishing your history when that's actually affecting you negatively. So you still want to be responsible with the utilization itself, in addition to making the payments on time. So yes, regardless if you make those payments regularly, if you're still maxing out the card every month, making those payments on time does you no good whatsoever.
And then are you referring to them maxing out and not paying it off in full?
No, correct. No. When they max it out and they let that statement hit, they pay it, but then they still use it up again at the end before the month is over, before the next statement. So every statement, that comes out, it still shows that your card is maxed out.
That's
See what I'm
yeah,
saying?
because
It still shows that you're still using, it still shows that you're using pretty much a great number of the balance or the available credit that you have, even though you've been making the payments. So making a payment and then still using it, it balances out the same way. It's still as though you just haven't paid anything.
Hey, Nia, would that depend on when you pay it back and when you use it again? So,
Correct. Like, I'm
yeah,
sorry.
so you
Monet,
need
go
to
ahead.
know your report, your statement and your reporting dates.
Yes. Yes.
Because yeah, if you are like she said, you're maxing out the card, because yeah, there are some people who they use their credit card in place of cash,
right.
and then they save the cash and then pay off the credit card. But if you're not doing it at the right time, and then it reports to the credit bureau that your balance is over that 30%, and then you pay it off or you pay it below 30%, and then you rack it up again, then yes, it's going to keep reporting that you're using too much credit because it's not reporting that you're paying it down.
Could you give an example of that, or how they could go ahead and pay it and still be on time?
So it's definitely like just making sure you understand. I mean, you have to know your due date. You need to know the statement date, and as well as understanding like when do they report to the credit bureau, because you don't want the high balance to report to the credit bureau, especially if you plan on paying that balance below 30%. Then you want to make sure that whenever the information is being reported to the credit bureau, that it looks positive on your end, and it's not reporting a high balance.
Okay.
So it's good to just contact your credit card company so you can understand when those dates are. So you're making sure that when that information is reported, that it's not reporting negative information.
Example, like if you know your statement comes out and your company, your credit card reports on the 1st of the month, but your due date isn't until the 15th, and you wait until the 15th to pay, by the time that statement actually comes out, it's still reporting what that balance is as opposed to what you paid. Let me give a further details. So if on the 1st, by the 1st, you know you have a $500 balance that's due, you wait to pay the statement on the 15th when it's actually due, what's been reported is that $500 balance. Now, if you pay your balance before the 1st, like the 25th or something like that, then you paid off that $500. So then what's going to report is a zero balance because you paid it off before the statement actually comes. If that makes sense.
Yeah, that made it much easier. Now let me ask you another question, and maybe Nia, you can explain. So now I've heard that people they'll pay their card full, and then they'll use it all completely, but it's all in the same time, and it's making that it look like they have nothing in there, and they haven't used it at all. Could you give me an example of that, of how they could do that?
Well, that's kind of like the same thing. So if you have a balance and you're trying to get it paid off before the statement comes out, you want to pay it earlier before the statement date. But as opposed to if you have, say against the 1st and the 15th, you have a statement that comes out on the 1st, but you pay it all off before the 1st, then it shows nothing to report. So if you're actually trying to show I'm responsible with this $500, I spent $50. You want that $50 to hit on the 1st, right, and then pay it before and pay it by the due date when it's actually due. So then they can show, hey, you still got $450 here left to use. Let's positively report that you only spent $50 this month and you were responsible with making that payment.
So it's kind of a game. And so it's almost like you have to, like Nia said, you need to understand like how your credit card functions And, you know, when it reports, because again, if you're not reporting any activity, then again, it's not going to help your score because you need that activity to help your score. But you also want to make sure whatever activity you're reporting is not working against you. So it's good to just understand what those dates are, just so you can make sure that you're generating positive activity on your credit report. There's a person, they have their hand raised.
Yes. Can you hear me?
Yes.
Yes,
Okay,
ma'am.
excellent. I first want to say thank you. This is fantastic. It's great. And I just wanted to add to what everyone is saying now, because I think I'm a living example of that. That's why this information is really great for me, because I'll make the adjustments. With regards to the utilization, I always use my credit card, but I also always pay the bill on time, because I figured once you pay on time, you're good. But what you're talking about is what I need to change. So right now, for example, I have $500 that's due. I've scheduled payments to pay off that $500 before the due date. However, I'm still using the card. So right now my statement is showing I owe a total amount of 8 something, but I have 5 something. I have the 500 that's due scheduled for payment before it's due. So I'm thinking, oh, I'm good. But based on what you're saying, I'm not good, because even though I have the 500 that's due by April 28th, it's going to be paid by April 28th. At the end of the month, it's going to report that I owe 800 and something, because that's the total balance that I have on the card.
Exactly.
Yeah.
So that's where it becomes a problem. You have to look at not only the due date and what you're paying, but you have to look at the total amount. And that's where it comes into the revolving amount. You have to look at the total amount that's on your card.
Mhm.
And the statement date when they report.
Right. So I don't want to just pay the 500. I would want to actually just clear that out. And that's just an example. The numbers is just an example, but you know.
You want
Yeah.
and you want to pay it before that statement date and before
Right.
it actually gets reported to the bureau. Yes.
Before it gets
Right,
reported.
and-
So yeah, so I'm realizing it's not enough to just pay the bill by the due date, but it's to look at the full amount that's due.
Mhm.
And then just making sure that you are at least getting it under 30% of that limit.
Right.
So that $500 coming out of the 800, that means you have like 300 something left. So depending on what your limit is, $300 can be under the 30% of that limit. So
Right.
you'll have to, so that's why it's good to calculate what 30% of your limit is, and then making sure that whatever balance that's reported is less than that amount.
Right. So thank you for that.
In addition to that, you also want to ask your creditors, who do they report to? Not all creditors report to all 3 bureaus. So sometimes when you look at your credit score, you see 3 completely different numbers that are, one's extremely high and the other one's kind of in the middle and the other one's a little bit lower. It's because they don't always all report to the same bureaus. They're not required to report to all the same bureaus. Because you actually have to pay a fee to report to a creditor. For a creditor to report to a bureau. So if they don't want to pay to all 3 and they only want to choose one, then they don't have to. So that is also why when you look at your credit report from all 3 bureaus, one account will show up on one, but it won't show up on another. That's why. And that's also what sometimes fluctuates your score. So you want to ask your creditors, which bureaus do they report to?
Yes,
Oh.
especially if you're especially if you're trying to purchase a house, they look at the median score, and it might be one score in particular that you need to work on. Then you'll want to know, like, if you, especially if you have to maybe open an account to build your score, you want to make sure that that account is going to be helping that particular credit score. So it's just good to ask those questions. Sometimes you can find that information online. If not, I would just call and ask them all of those questions so you can make sure that you're doing everything you need to do to benefit your score. There is a question about, does it matter? Is there any advantages between different credit cards? Does American Express, Visa, MasterCard, Discover, or any other credit card company have any advantages over the other to help with credit reporting? When it comes to credit reporting, I don't think there's any different advantages. I think when it comes to the difference between different types of credit cards and different credit companies is mainly based on what benefits they offer to you, as well as if there's any additional fees that you have to pay. So it's just good to look at the different credit card companies and just making sure that when you are choosing a credit card, that you're choosing a credit card that fits you the best, as well as I would try to avoid credit cards with annual fees unless there's some type of benefit that outweighs the cost of the annual fee. So I don't know if there's any advantages over who would help with credit reporting. I just think the advantages or cons is really based on what they offer to you as a card holder. And then any additional fees that you have to pay, or the different interest rates that you might be given. Did that answer your question, Jose?
Can I go back to a comment that or make a comment about something that you said about applying for a mortgage?
Yes.
When it comes to applying for a mortgage, a lot of times people will go in and they will assume that because they see something on their credit report, or they look at their score and they think, oh, I'm not going to be able to get a loan, so let me go ahead and start fixing this or do what I need to do to try to get my credit together. We me being a realtor, the realtor side and the housing counselor side, highly advise you to talk to your lender first, or whoever it is that you're applying with your loan for, so that that lender can tell you, hey, you need to fix this, you need to pay off this, you need to get this balance down to this amount. Because a lot of times one of the biggest mistakes home buyers make is going in and trying to start paying off a lot of stuff, a lot of debt on their credit report, that makes that old debt current debt, because now they're starting to make payments on it again. And that drastically drops their score. So if homeownership is the goal, and you want to know kind of where you stand with a lender first before you start that process, so that they can tell you what it is that they look for, because the lender knows what's it going to take to get you approved for a loan, and let them tell you what it is that you need to pay off or pay down. And then at that point, we're going to encourage you, reach out to a financial coach so that they can figure out what's going to be the best route for you to take to get this debt paid down, paid off, the best way, the quickest way possible for you.
The one thing I wanted to ask on that, when you have medical bills on your credit report, because a lot of people start paying those off, could you explain that also?
Generally, lenders don't look at medical debt. They don't generally let that count against you. One, because of the way the insurance companies sometimes report, or the way the insurance companies delay with making payments on certain bills, the way the hospitals or doctors or whomever actually report to the bureaus, it gets all kinds of jumbled and messed up. So they don't generally count medical debt unless they could see that you've got a recurring, something that keeps you off of work for a period of time. Like, every 6 months or so, you've got these astronomical bills that then start to pile up, and that you're missing work and things like that. They're going to wonder what's the stability and the longevity of you actually being able to pay down, keeping employment so that you can pay on your debt. But when you've got old medical bills and stuff that are on your credit report, they don't count it.
Fantastic.
So Jose asks, I have some renters and they are in good standing and pay on time. How can I, as a landlord, report to the credit bureau? That I'm not sure, but I've rented at a complex before that reported to the credit bureau. I've also seen, I don't know if it's through like my current or my last apartment company complex. They had a company that it was like, if you sign up with this company and I think there's like a small fee, then they will report your rent payments to the credit bureau. But I'm not for sure like where a landlord would set that up. But I've seen it, I've had it on my credit report before. And I've seen where like apartment complex that I lived at, they had a company that I could set up an account and have my rent payments report to the credit bureau. So that might be a little bit of research that you have to do. I'm not for sure how it works for private landlords or if it's just something through like big apartment management companies, but I have seen it before.
Okay.
You can also just try contacting the bureaus to see if there is a way that a landlord could report, or if they have to actually go through a particular service in order to report. Another thing that you can do to try to help your tenants, or if you let them know if they don't have a lot of credit or what have you, I know Experian does it. I'm not sure about the other ones where they have Experian Boost, and Boost will allow people to put non-traditional credit into, they can report it themselves and link like their bank accounts and their utility bill accounts, cell phone accounts to their credit. So it'll show the bill came out this day, and they can, and you could see where the payment actually came out and then got applied to like your cell phone bill or utility company or things like that. So have them try Experian Boost. Again, I'm not sure about the other credit bureaus if they actually do that as well.
And then the last question is, will it hurt your score if an installment loan is paid off and the bank closes the account? It does drop your score a little bit, but it's not gonna, you'll see that score start to go up again when that installment loan is closed.
And one of the things I wanted to pass on, you know, we here at the City of Houston have a lot of employees that need this information, need to get their credit corrected, are thinking about purchasing a home. Make sure if you at your job, and I'm just talking about me here at the City of Houston, but if you at your job love this information, make sure, you know, you're not the only person that's trying to clean your credit. You're not the only person that's trying to buy a new home, you know, so make sure you pass this information on, tell them to come to the month of service, because, you know, Monet, you got Miss Nia and myself. Now, to be honest, I do not know anything about this. That's why I'm asking questions, but Ms. Monet is the expert and I'm continuously learning. But pass it on to your co-workers and your family and your friends, because you know what? We don't want to hold information, great information like this to ourselves. We want to pass it on and have more people learn and get educated. Thanks, everyone.
Yes,
Absolutely.
And I do want to go into what financial coaching at Family Houston help with. We do have multiple coaches with Family Houston in different areas of Houston, and pretty much how financial coaching work is that you come to us with a particular financial goal, and then we help you create action steps, and then we hold you accountable to the things that you say that you need and want to do to accomplish that goal. Two things that we do when we first meet with you, we go over your current monthly budget, as well as we do a free TransUnion credit report pull We provide you your FICO score, and then we go over your credit history and actually talk to you based on what's on that report, you know, the things that you can do to fix your credit. If there's anything on your credit report that you're wanting to take care of. So whether it's getting out of debt, or you're trying to increase your credit score, then once we review your credit history, we can like talk through it with you on what are the different action steps that you need to do to get to the final goal of where you want your credit to be. And then with that, we do help you with budgeting your money, because you know, anytime you have a financial goal, the budget is the foundation to any financial goal. I personally like to do accurate budgets. So I'm going to have you have your bank statements open whenever I do your budget, because I want to make sure that we're using accurate information to ensure that we're getting you to that goal, because the only way you can get to that goal is to have accurate information. And to be open and honest with your coach. We do help you with finding ways to build your savings, as well as get you credit ready to buy a house and car. And not only are we here to hold you accountable, but we also here to offer some education on things that you might not be familiar with, how to go about certain things, as well as we have tools and resources that can help you be successful at your financial goal. It is a free service offered at Family Houston. And this month, we actually changed how to schedule an appointment with us. So if you are interested in scheduling with a Family Houston financial coach, or you're wanting to schedule with me, you would need to visit familyhouston.org. And under, when you click on the program drop-down box, you'll click on financial stability, and then it'll take you to the financial stability page, and then you'll just click and complete our intake form. And then if you're wanting to meet with me, then you'll have to put somewhere on the intake form that you're looking to meet with me as your coach. Otherwise, a financial coach will contact you based on the region that you live in. So it's pretty simple to schedule with us. If you have any questions for me, or again, if you are wanting to schedule directly with me, then you can reach me at my Google Voice number, which is 832-987-2023, or via my email, which is mcheney@familyhouston.org. So that's mcheney@familyhouston.org.
Monet, there's a follow-up question about installment loans in the chat. It says, I purchased a truck with a 5-year note and paid it off in 3 years. I went through a credit union. Should I close that account since it's paid off?
I would say no, if they are still reporting positive payments to your credit report. Because I know in the past, when I worked for an auto loan program, if our clients, if they paid off the loan early, the lender that we were using, they would continue to report on-time payments until the payoff date. So I would check with your credit union to see if that's something that they're doing, because then that means even though you paid it off in 3 years, you'll still have 5 years of credit history with that particular loan.
Yeah, and as soon as you pay, and as soon as you go in and request for that to be closed, that 3 years of payment, positive payment history that you've made, it's all gone. So I definitely would not, without contacting them first, to find out if that's what they're doing.
And Aurora asked if it's being recorded. Yes, we are recording the presentation today. And I believe Nia will send out a link with that information sometime after the presentation.
But you know
Yes,
what?
I will be emailing it to everyone.
But also when you watch this and you go home and you talk to your friends and your family and you start asking some questions, send us the questions that you have so that when we come back next month, Monet will already have those answers or will be able to assist you in whatever questions you now have once you've taken this class. Because I assure you, every time I take it and I'm sitting there listening to Ms. Monet and Ms. Nia, I'm always learning something new. So when you go back home, watch the recording, or you can, watch the recording and then think about what questions you have, send us the questions, and then Ms. Monet can have the answers for you next month.
And like
Also-
Myra also said, definitely share this information with whoever it is that can find this information to be beneficial, because not everybody knows a lot of this stuff. Some people may think that they do and kind of how it works, but definitely share it with people, and especially your children, those teen children, kids that are getting ready to go off to college that don't really understand how credit works and some of the choices that they're going to start making and how it's going to impact their credit in the long run.
Yes, please share it with your teenagers. My son actually just turned 18, believe it or not. And we went down a checklist of everything he needed to quote unquote do to be an adult now. And so that involved him getting his bank account switched over to just him, and switching over his savings, as well as I've talked to him about opening those credit builders to make sure that he's working to build a good credit history. So when he is ready to move out, he already have a good credit history and he don't have to worry about paying extra deposits and fees to get his own place. I'm not for sure. Can y'all still hear me?
Yes, we can.
Okay, because my screen kept blacking out. So I just wanted to make sure you guys can still hear me. But yes, if you do have teenagers that are just turning 18, they're getting ready to graduate high school and go off to college, and they're ready and they might be wanting to move out and get their own place, I would just start like that senior year. Start with them saving their money, as well as when they turn 18, helping them start to build their credit. So when they are ready to like move out, they won't have a hard time getting a place to rent, as well as they already have those habits that we didn't have. Like when I went to college, I got my first credit card and I maxed it out, and it ended up going to collections. So it's good that you guys are learning this information, that you can pass it on to your teenagers so they don't make that same mistake that some of us made when we first went to college and got our first credit cards or got our first loans, and we were unable to pay those loans off or credit cards off.
Oh yeah, I went through that, and you know what? It's so funny, and I really appreciate you, Monet and Nia, because learning and growing is a process, and banking and paying your bills is also a process, and you have to make sure that you pay everything on time and don't wait. Even if sometimes even if you wait a day after that 10-day expenditure, I tell you what, they're going to call it into the credit bureau, and you're going to go, what? And it's going to be held against you, especially when you're trying to buy a mortgage, when you're trying to buy a brand new home. And it seems like, Monet, correct me if I'm wrong, when they start seeing that you're correcting a lot of your credit, is that when some of those credit bureaus or people start reporting a lot of the stuff that they didn't report? Or is it just my brain talking to me like that?
So are you meaning like if
once you start cleaning your credit up? once you start paying your back dues and your anything that's under your credit that you owe negatively. Does
Oh,
it?
so you meaning like some accounts, they try to jumpstart the dates?
Yes.
Oh, yeah. So sometimes that can happen with collection accounts. They might change what that delinquency date is once you start making payments to them. So then if you stop paying again, then now you have a new delinquency date. So it's going to be 7 years from that last delinquency date. So that can mean that negative information will remain a lot longer on your credit history.
Okay. So make sure you pay your bills on time, in other words.
Yes,
Or before
or
time.
like my mom used to tell me, she was like, if you get a collection item, if you have the ability to pay it off, some collection agencies will allow you to pay it and they'll delete it off. So I would definitely double check if they will allow you to do that. I mean, even if you're not currently trying to buy anything, if you do have the option to just get it like paid and taken off, then that means you don't have to worry about it later. So, but I can understand, like, if you are currently working to purchase a home, I wouldn't pay off things unless the lender says that they want that paid off. But if just say you're gonna purchase a home 5 years or so from now, and you just don't want collection items on your credit report, then I would definitely check and see if there's a way where you can just settle and delete that account off your credit report.
There was a question, at what age shall I add my child to my credit card account? Will his credit score match my score since he is on my account?
I don't think the age matters, but with the credit score part, it's not going to match because you have other things on your credit history that's affecting your credit score, and your child might just have that one authorized user account. So their credit score is going to be different from yours.
So what, on that note, I've been told that if, let's just say, if I have a child and I add him to my account and he had no credit history, then he would automatically have better credit. Is that correct? Or could you explain?
Yeah, because so whatever activity that you're doing on that credit card, that same activity would be on his credit report. So just say, for instance, you have a credit card and your balance is over 30% on that one credit card.
Mhm.
And now that one credit card is on your child's credit history, then because he only have that one card and that card is over 30% utilization, then that's going to drop his score because that utilization is over 30%, even if you're paying on time. So if you are going to add your child as an authorized user on a credit card, I would make sure that whatever card that you add them to, you're paying on time and that balance is below 30% of the limit. Because again, it's the total limit. So if they just have one card on their credit report and that balance is too high, then that's going to be a negative effect on their credit history. So just make sure if you're going to add them as an authorized user, it's on a credit card that has like a very low balance and you're paying on time.
Okay, fantastic. Are there any other questions? Is there anyone that would like to unmute, raise your hands and ask a question personally?
There is, he said, does making bi-monthly payments on a credit card help improve your credit score versus just making a single payment each month? Again, the number of payments I don't think matter. I think it matters, again, the date in which you make that payment and when it reports to the credit bureau. as well as whenever that statement date closes, because whatever your balance is, when that statement date closes, is going to determine how much interest is added to your credit, to that credit card. So sometimes with, and this can even happen with installment payments too. Sometimes people pay bi-monthly because when that interest is totaled up, they want the balance to be lower. So then the interest that's added is lower too. So again, I don't think it really helps your credit score per se, unless your balance is over 30%. Then that's the only way it's gonna affect your credit score in a negative way. But I have credit cards. I make multiple payments throughout the month.
I do.
I know some people, they make a payment every time they spend on their credit card.
I do.
So I think the only thing that matters is just making sure that there's a payment at least made before the due date, as well as that balance is remaining under 30% of your total limit.
Cassandra, you have a question? Go ahead and unmute yourself.
Yes, I do. Do you all like provide financial lessons for like middle school, high school students?
In the past, I used to do financial literacy classes for high school students, seniors actually, because our agency, we can only do financial coaching with individuals that are 18 and up. Usually when we go out to do our classes, the goal is to talk about the benefits of coaching as well. So we do, I've spoken to high school seniors and actually just talked to them about how to prepare for adulthood and how to start, building their credit, as well as building savings, retirement savings, how to budget their money, how to pay bills. So I've offered those classes in the past. Since the pandemic, we haven't been invited to do it, but if you know of any schools that are interested, then you can reach out to me, or that school can reach out to me, and then I would put them in contact with my director, and then she will set up a coach to go to that particular school. As far as middle school students, I've spoken to middle school students before, but I know I think like a few years ago, our agency decided that they only wanted to stick with us speaking with seniors, because of the fact that we do need, because we do want to promote financial coaching as well. So we will want them to be closer to 18. And we can also do financial coaching with teenagers if the parent gives a permission or the parent is in the session with us. So I've done financial coaching with high school students, and their parent was in the session with us.
Okay, so you do individual with parent.
Yeah, so we do individual, and I could check with my director on middle school because things change all the time. But I know a few years back, I was told that we can only do high school. We can do literacy classes for high school seniors.
Okay, thank you.
Are there anyone else that's interested in asking a question personally? Unmuting yourself. Guys, we want to welcome you and thank you, Monet, as always. I'm always learning and I'm always asking these crazy questions, but we're all trying to survive, we're all trying to learn, and we're all trying to get better. So we want to also thank you all for taking time out of your busy schedules and to come out here and learn. That's what it's all about. We're all trying to get ahead and learn more and get better credit scores, be able to purchase homes. When we are applying for trying to get insurance or cars, we want to get the lower interest. So just make sure you're watching and you're learning the process of your credit. It's a game in a sense, but you have to learn how to play it. And sadly, it took me at age 62 to learn about credit. And that's something that is so important. And I love what Cassandra said, that, you know, hey, how young can I bring a child from elementary? Exactly, you know, figure it out. Or maybe you yourself, whatever you're learning here, you know, pass it on. Monet, are there any last words you'd like to pass on?
That's all I have. That's all I have for tonight. I would definitely, just like you said, just continue to pass on the information. If you do have high school children, teach them this information as well, because trust me, they will share it with their friends too. Do you know what our next presentation
I
is?
do not have it in front of
next
me.
month?
We're still working on the schedule. So it will be the same date in May. So we haven't gotten the schedule out yet, but we'll pass it on. And when Nia sends out the recording, we'll also pass on what other classes and when your schedule is.
Yes, and again, if you have any questions, please feel free to email me. That phone number, you can actually call or text me on that number as well. I am happy to answer any questions, as well as if there's any budgeting tools, any other financial tools that you're interested in, feel free to reach out to me, and I will be more than happy to provide that information to you.
And guys, when you're thinking about asking questions, there's no silly question. I mean, I'm sure you heard me blabble on. Okay, what about this? What? And I'm trying to learn and get educated myself. So feel comfortable to ask whatever question you'd like, because we're here for you. Thanks, guys. You have a great night. And Monet, the queen, thank you so much. We really appreciate it.
You're welcome. And thank you all for attending and engaging in the conversation. And I hope everybody have a good rest of your evening.
Thanks, everyone. And there's going to be a survey that we'll ask for you to fill out right afterwards. Thanks, everyone. Have a great night. Stay safe.
Thank you.